Now, I wanted to review a little bit of information with you, okay? Now, one of the most important factors right now is to understand exactly how insurance companies work, okay? Now, their prices are always going to fluctuate, okay? There's no such thing as maintaining the same price forever, okay? And just like any product, any service, at one point, the value or the cost drops. Does that make sense?
Yes.
And we're talking of everything across the board. I mean, or sometimes it goes up. Does it make sense? So let's say, for example, as far as insurance, the cost is always going to go up. Because we're talking of an insurance, we're talking of a quantity, okay, that the insurance company is going to pay in case of an accident. So let's say, for example, if you make damages of $3,000 today, for example, okay, the insurance company is going to pay for this. They're going to pay for this out of pocket. So let's say, for example, if your monthly payment, you were telling me your monthly payment was $40 a month before, right?
Yeah.
So let's say, for example, $40 a month was good enough for an insurance company to offer, let's say, $15,000 per person, $30,000 per accident, and $5,000 for property damage.
Okay.
But let's just imagine that, you know, 50 to 60% of the customers that they have encountered a situation where they were involved in an accident and the insurance company paid money out of their pocket. Okay, so this is no longer, the $40 is no longer enough. Okay, why? Because they lost a lot of money. Okay, so now maybe the option will be 60 to 70. Okay, so the prices are going to go up. For example, let's talk about a couple different factors or different either services or products that may give us, you know, some sort of confirmation that the prices are not the same today. For example, gas prices. Do you remember how much a gallon cost maybe like 4 or 5 years ago?
4 or 5 years ago.
Very low.
Right.
Okay. Now I remember that at one point it was actually $1.50, $2, for example. Does that make sense?
Yeah.
So now we're talking of what, $3?
Yeah, about.
Let's say 2-3 years ago it was $4.
Right.
Does it make sense? It almost went up to $5. So the prices fluctuate. Okay.
Right.
Now, what's the reason that gas, you know, has been going up and down? Is the cost. How much are we paying, or how much is the companies paying to actually obtain gas?
Right.
Okay. If their cost is going up, then our cost is going to go up. Does that make sense?
Yeah.
Another scenario, for example, airline tickets. Is the price always the same?
No.
You know how they have, let's say, well, I'm not so sure if you bought any airline tickets.
I have not.
Okay, so let me tell you exactly how this works. Now, it may be a little bit different, but we're using the concept. Okay. Now they go based on season. Okay, so seasonal, for example. Now, if you buy a ticket within, you know, the holidays,
Right.
you're gonna pay a lot more.
Right.
Does that make sense? So for holidays, your price is gonna be a lot higher. Does that make sense?
Yeah.
Why? Because there's gonna be a lot of people, you know, flying. You could say, okay, taking a lot of trips. So they have the luxury of charging you a lot more, because you're gonna have to pay whatever the cost is. Does that make sense?
Right.
Number two is seasonal. Okay. It may be more expensive in the summer. Why? Because, you know, vacation time. Okay. And then number three, the only positive, if you buy it ahead of time, then you may get something lower. You may get some discounts, right? So if you buy, let's say, purchase a ticket, you know, six months prior to the actual to the date that you're flying.
Okay.
So it may be cheaper. Other than that, you're going to be paying a lot more if you fly during holidays. Or let's say, for example, you need to fly by tomorrow. You need a ticket by tomorrow. It's going to cost you a lot more than, you know, and if it's going to cost you a lot more than if you purchased a ticket, you know, a month ago. Does that make sense?
Yeah.
They charge you more based on the situation. Now, insurance companies don't really work based on seasonal, but they do work based on losses. For example, if they don't encounter a lot of losses, you know, they may put a program out there for 3 to 4 months where you're paying something a lot cheaper.
Right.
Okay, so the majority of the time, the companies are always going to charge you a little bit more. Okay, why? Because the prices, you know, let's say for example, your price was based on 2000 and what?
2006.
2006. So for example, from 2006 to 2015, we're looking at, you know, there's a lot of data that's completely different. Their losses, whatever the amount of money that they paid for, you know, accidents is completely different from 2006. Simply because in 2006, maybe the amount of drivers were a lot less, population was less. Okay,
right.
So therefore, in 2015, they're going to balance their losses. And how are they going to balance their losses? By maintaining a price that's fair based on, you know, their evaluation, based on, you know, the cost, how much money are they spending to cover those accidents. Okay, so $40 a month is going to be impossible. Once again, prices fluctuate all the time. For example, rent. For example, that's another good example. Let's say, for example, I remember, you know, 7, 8 years ago, I was able to get an apartment, 1-bedroom apartment, okay, for roughly about $800.
Right.
The cost today, minimum of $1,200. Why?
Prices fluctuate.
Prices fluctuate. Let's say, for example, and let me give you the reason, and everything is based on the same concept. The landlord, okay, their cost is going up. Maybe utilities are going up.
Right.
Maybe their mortgage went up. Does that make sense?
That makes sense.
So what are they going to do?
Charge more.
They're going to charge more.
Right.
Okay, why? Because they don't want to take the loss for the difference. Okay, so therefore the prices are never going to be the same. So let's say, for example, if you get the policy today, okay, your monthly payment $60 to $70. Let's say in 6 months you let the policy cancel. What do you think is going to happen?
It's been more expensive.
Well, the fact of the matter is that you're going to take a risk of getting something higher.
Right.
It may not go up. It may not be more expensive, but just the idea that prices fluctuate.
Okay.
Does that make sense? So you're going to be in the same situation that you're in today. Okay? Let's say, for example, you're hoping you can find 40. In 6 months, if your policy cancels, you're hoping that you can find 60 to 70. Does that make sense?
Right.
They're going to reevaluate the situation, and if, let's say, from today to until 6 months, if they've encountered a lot of losses, then most likely your price is going to go up. So therefore, keep that in mind. Prices are never going to be the same. Okay? So 60 to 70 is the lowest option that we have. Once again, due to the fact that prices are not the same. Okay? Discounts are certain discounts that you qualify for before they may